Okay, we're going to examine in this presentation the various types of audit reports that you can have for your statutory audit. Okay, the file here should be available on Moodle, for you to actually have a look at and go through yourself. But basically, situation is that when you're actually looking at your report and considering your outcomes, okay, there's two potential ways that you could actually go. There's the situation if there is an issue or a problem, you can go in regarding done, so is a minus, and you're looking at modification. If however everything is okay, you're looking at an unmodified report. So modifications means some issue, some problem. In other words, something is bad. And unmodified means regardless of this all okay or no particular problems. Now, even though it is modified or unmodified, then you always end up in a situation where you have your key audit matters always exist, especially if you're a public interest entity. A key utilities, a bank, or a listed entity on the stock exchange, and this is becoming more and more popular regarding the ACCA exams. These are the areas that you would discuss with the audit committee in conclusion of your audit. Weaknesses, controls, management, management policy, management decisions or representations. Okay, in areas regards going concern. Okay, now. Let's look at the plus side. Let's look at the positive areas and said, if I am happy with the matters, everything is okay, I think the accounts are true and fair view, and there is still 3 potential extra paragraphs here our opinion is unmodified. Just we're key to this to be clear on it. Right, okay. The financial statements are in fact correct. I have no issues with that. Okay, so turn and do it. Let's look at the first one. It says is the emphasis matter. What's the paragraph? It is to be used for any areas except for going concern. Now, originally emphasis matter would have been used for going concern, but there's a new one here, the material uncertainty related to going concern, and that's to be used from now on. So the emphasis matters is you're stating that the accounts are correct, but it is an important disclosure note, right? So what you're doing is you're emphasizing the disclosure note. You're pointing out that you are happy with the material. You have no issues or considerations with regards to it. Your opinion is unmodified, no problems. But this additional piece of information would be relevant to you in understanding why I actually came to this opinion. Okay, the other paragraph we look at is the area go to it of other matters. Okay, and other matters is is key. There's no issue regards the financial statements. They're all okay, no problems there. Okay, that goes down. Right, the issue that you have it is something else got to it done because it needs to be dealt with. So for example, the annual report it is your issue. Okay, you have a problem here done that way. So what's that what we're facing? The financial statements are okay, something else is the problem. Okay, now the new paragraph that exists regarding what's a material uncertainty related to going concern here is only used. The financial accounts are correct, it says that way, but there's an important note about material uncertainty regarding going concern. An example of this from previously would be the banks being in a situation that based on their finances during the Great Recession of 2007 to 2012-13, and in some cases still going, that the bank's financial statements are showing that it is not a going concern. It's actually problem areas here. However, government guarantees given to it, security given to it regarding allows you to do the going concerns. Okay, so that's okay. So these, as I said, are all areas where the financial statements are okay, you're happy to say true and fair view, but these are just little extra points guess what you would actually tackle that. Now, the modification that exists, and because of that, and the key thing because it's just 4 modifications that exist. Okay, okay, there's the material. Okay, lack of evidence material, lack of evidence pervasive, financial statements misstatements material, financial statements is pervasive. Now, where it is pervasive, it is material. Okay, so the issues behind here, because that way you will not be looking at any of these areas where it is immaterial. Okay, right now, in dealing with your that way, you must explain your reason for your modification and your basis of opinion because of paragraph. Okay, right now, reason for modifications, the 2 big ones or the 2 main ones that you're going to consider is a lack of information or lack of evidence. Okay, now if it is material but not pervasive, in other words, it is significant enough that it will give consideration to the user's statement or review pause for choice, but it is not widespread throughout regarding the financial statements or the accounts, so it is isolated for a fact in a particular area, then your option here is a qualified opinion with the case of wording like except for. In other words, the accounts are showing a true and fair view with the except portion of fair value for investment property. Okay, here you're looking at it because an example is an accounting standard has not been complied with regarding customer. So taking the investment property situation, the valuation was not regarding independent right, enough. Okay, now a lack of evidence, again remember it is material, but here now it is pervasive. It is right throughout the situation. It is big enough issue that you can where you can't actually get issues. In the previous example, except for, we were able to isolate it and say valuation did not exist for investment property. Here, this is something where lack of evidence is so widespread or so that a prime example here would be no going concern evidence is actually provided. Here you're giving a disclaimer for opinion. It doesn't mean that his account is wrong versus what you're clearly stating is that you do not have enough of information to make an opinion. Okay, so a lack of evidence, if it's in a particular area, qualified opinion except for whatever because it's done that way. So if the accounting standard is not complied with, like IFRS 13 and fair value because we're a particular item, because we go through it. However, if it's that way, because if we go right throughout the activity, because it's disclaimer of such no going concern. Okay, evidence presented, you can't make a decision. I can't comment whether it's going concern or not because I didn't get the evidence I needed to actually do it. Okay, so that's the said reason for modifications regarding lack of evidence. The second main reason that you would have a qualification regards or modification to your report. There's a modification and qualification. Qualification is you're saying that because is where you're actually looking at the financial statements are actually materially misstated. Again, if it's immaterial individually or immaterial aggregately when added into everything else, you would ignore it. You would not actually deal with it. But if financial statements are materially affected, but it is not pervasive, it is within a limit. It is big enough to cause concern, but it is within a limited area. So you give like a qualified opinion. An example here: the client has a going concern with certainty, but failed to disclose it. Okay, so you kiss that because, however, a pervasive matter. Okay, it is significantly larger or spread throughout the whole lot. So here, for example, the client says there's going concern, and the account auditor is quite adamant in saying no. Okay, I do not agree. It's going concern. Okay, bank is foreclosing on loan, no finance is available, you are loss making, and you management have not produced any solid representation as to why they believe the going concern is acceptable and we go through it. So here there's no it's a choice, no it's an adverse opinion. You're stating that it's not true and fair view. Okay, So as I said, because the key areas to look at regarding if it's you're happy with it, the need for these three statements, okay, because the emphasis matter, other matter, material uncertainty, these statements could all, or these paragraphs could also be included, okay, in reason in the modified report. The key audit matters, the areas for discussion with the audit committee is present if it's modified, also present if it's unmodified, especially for a PI, a public interest entity, listed entity in the stock exchange, or utility, or banking institution, financial institution, that and it's becoming popular. Regards to modifications, as I said, you have to explain the reason in the basis of opinion paragraph, and the two main areas: lack of evidence and financial statements. And then is it material but not pervasive, material but pervasive, material for financial statement, material not pervasive, material and pervasive. Also remembering that while issues that may be identified might not be material, would be immaterial, okay, then for you could actually ignore it and not have an impact and go for your modification. Okay, that concludes this quick look at it. It's a hugely popular question on ACCA exams. The format of it seems to be along the lines of this. It will give you 3 or 4 transactions, accounting issues, asking you to calculate the materiality issues, ask you to consider the issues. It's a large section, and your section B, question, and actually need to look at it and deal with what's actually going on. Okay, so that's where it's actually focusing on. Okay, let's look at how this is being approached in this exam paper. So let's look at the specimen paper, for AAA, for international and we actually see in here in question 2, part B. Okay, for 15 marks, explain the matters should be discussed with management in relation to each of the uncorrected misstatements, and assume management does not adjust the misstatement, justify an appropriate audit opinion, and explain the impact. The report. Okay, and what you have as situation is, as we said, 3 accounting adjustments, 3 detailed notes on it, saying the situation, key for you to go, and up at the top of the question it turns around and tells us our financial statements recognize revenue of 2.5 million and total assets of 35. That's what I need for my materiality. So this, I need to bring that fact down here to my section B to be able to deal with it. Now I need to look at the materiality levels on each of these on their own, and as I said, are the material for the statement of profit and loss, are the material for the statement of financial position, are the material for both, and is there any interlinking between these materials so that we can actually see what's actually happening or occurring, what's on it. Okay, so what should, as I said, is it individually material, and is it aggregately material? Okay, that was right. Okay, so turn that so key to do this question, you need to know your percentages from your ACCA materiality levels. You need to be able to attack them. You don't go through it done. Right, okay. This is key ones, as I said: revenue, profit, net or total assets. Okay, that goes through it. So whole lot is dealing with, are the material, is the pervasive, are the turnaround to a situation, whole lot is to it. So for example, in case of we're turnaround told in here, the share-based payment scheme was established in January 2016. Management had not recognised any amount in financial statement in relation to the scheme, arguing due to the decline in Bradley Co. share price, the share option are unlikely to be exercised. The audit conclusion that the expense and relative should be included in finance. So here we have a disagreement between the two parties. Management saying case was done that because we're through it, okay, no case was a provision, okay, and we have the auditor stating yes, there should be. And so this is a situation of a provision. Going back to basics, conceptual framework, definition of a liability, present obligation, past event, future economic outlook. Because the current value will change hands, okay, out of the business, okay. In this situation, the present obligation exists. It is the payment scheme, okay. Now it's turnaround due. It was established, guess what's in 2000 X5, okay. We're doing the accounts, guess what's for August X5, okay. So it's a situation, guess that. The accounting standards are quite clear in this area, because what's it? Share-based payments, employee benefits, matters like that, should be vested over the life, okay, and discounted as necessary, to reflect it, okay. Here the situation that we're here. The matter, here is, a non-application of an applicable accounting standard, okay. Now, calculating your materiality, because we're two issues. So, it is not okay. This area is therefore okay. It is not an area regards lack of evidence, okay. Therefore, it is actually the financial statements are material misstatement, okay, because, okay, there has been a application or an incorrect treatment, okay. Now, if it is immaterial, you would leave it here. If it is material, qualified opinion, because saying everything is okay with the exception of a provision being made for the case of share-based payments, okay. The second one is also an area provision, and it's a restructuring provision told. A provision may be recognised in respect of restructuring include involving the closure of one of the steel processing plants. Management approved the closure August 2017, 2000 X5, but only announced the closure to employees in September X5. So we're turning to look at the situation. Guess what it is? August X5. Guess the situation is now here. Management has actually made the provision. We're saying it shouldn't be. The point between it regarding the key matter here is actually the date in which it was announced. It is that date that creates the present obligation, and as that date is after the financial year end, therefore there is no need for this provision for the accounts. Again, it's a misapplication of an accounting standard. Right, so it is not unless it is completely immaterial. It is not an area that regards lack of information. It is an area regards the financial statements are misstated. Okay, it is not pervasive. It is not throughout the entire financial statement something as critical as going concern. It is only in one area, a restructuring provision, which is your expenses and your current liabilities. And it is, if it is material, okay, then I'd have to do qualified opinion also for this matter. Okay. The announcement relates to the third one, the estimate of additional allowance required for slow-moving inventory. This allowance relates to slow-moving inventory in respect to a particular type of slow alloys, which demand has fallen. Management does not recognise an allowance of 35,000, which is considered insufficient by the audit team. So here, management has provided a sum of 35,000, okay, The audit committee said, nope, I think that should be 10,000 more. The position here is, okay, going back to my flowchart, if it is immaterial, because of my area, because what's it of other, because what's it non-modification, and if it is not a matter for lack of information. The financial statements, is it materially misstated? Is the 10,000 significant? But what is key, it is not an accounting standards issue. And it is not a misapplication or misinterpretation that way. It is because of judgment or subjective point of view. They have said 35,000 is sufficient. We're saying we turn around and think it should be 45,000. In considering your opinion, you would need to be aware of why management has decided on the figure 35. Is there any other reason that you have not been brought to your attention that this case should be considered done? Okay? And that case is issued case of chair. Now, straight off, as I said, okay, it's very dubious that we get to it, and if you actually approach it and deal with it, okay, it's regarding guess what's it's 15 marks that is really achievable, and guess what's that, and should be looked guess what's it matters guess dealing with it guess done. Now, looking at the suggested solutions or marking scheme, okay, you can see, as I said, there's generally 1 point for each mark explained, so 15 marks needed. Okay, I say requires order to understand management's reason for not adjusting misstatement. Critical, you turn back, they give you the accounts, you say you disagree, you say because you want to change, they say no, you ask why. Okay, the IISA then, because it requires audits to communicate impact of unadjusted misstatements on the opinion you actually looked at. Regards to share-based payments or calculations here shows it's the material assessment. The fall in share price is not a valid reason for not recognising credit that way. It should be vested. That's your accounting knowledge coming in. That's your standards question. Material misstatement due to breach of the financial reporting standards because it is not in compliance with the standard. Okay, then it is material, despite the fact of the size of the adjustment. The provisions. Materiality assessment again, and provisions is recognised too early, is recognised in August, when it was only matters was announced, or for provisions for restructuring was the cat was let out of the bag, so to speak, in September after the year end. It's material misstatement again due to breach of the financial standards. Consider if there's any additional information to explain why they need to do the recognition. Maybe there was consultation, maybe there was a public comment, maybe there was a press release or statement made to it, and the auditor was not aware, and the absence of any further material misstatement due to breach of financial reporting standards encourage management to make necessary change. Right, remember, you can only encourage them, you cannot order them to change. Regards the inventory, material assessment, it's the difference between something that's clearly trivial, immaterial, and material. Clearly trivial, it's tiny, it's insignificant. That way, immaterial, it's a big enough issue for you actually because you have to look at, but it wouldn't change your opinion. It's not that bad. Okay, and finally, material. It is significant because the size that's done. It's a material matter here is a misstatement of judgment rather than fact. It's no accounting standards being breached or being broken. Okay, you should actually look at that. And finally, because the management then should be encouraged to change. That's a standard point, like coming in because it's done. Right now, regards your. That's because of giving you your 10 marks, okay? With regards to your 5 marks, I said you impact the report, generally 1 mark again, do it way. Determination the aggregate impact the adjustment, so you look at how much the overall is affected. You need to quantify it. You need to give numbers now. Material misstatement and modify the opinion is necessary. Why? Each issue that are material, it is in there, but it is not pervasive. It is not widespread throughout the account, so you can accept for opinion. Discussion and conclusions whether opinion should be qualified or adverse. you get your mark like cause in that cause to it, and cause and your basis for a qualified opinion cause what's it cause a paragraph to include description and quantification that way. So you're talking numbers, you're talking details, you're talking it's not pervasive, you're talking that cause to it, okay, which basically is your argument regarding trends. The material counts are materially misstatement. It is in this situation. Is it material or pervasive? Should I do each area? Because in this situation, because it is not widespread throughout the accounts, I should kiss it that way. Now, that's from the specimen paper. Okay, the June case, what's the case of paper previously in 2018? It would have looked at the question of actually something similar, of dealing with that situation, not so much giving you the numbers, a bit more wordy, a bit more put that way, but it's straight off regarding case what's the similar issues. Okay, what we are finding is a big change in the layout regarding case what's it. So it has in September. Okay, we turn around looking case what's it, and if we look at our case what's it question 2, and we case we have 7 marks, 5 marks, that gives us 12, and a third one case what's it for another case of 5, so we're up to 17. It is effectively the same question, word for word. It deals with 3 particular areas. This is that because, and this is something which has came out from the Learning Providers Insight conference that was held on the 7th of November 2018, in which they've said that the exam team is trying to make the paper more familiar, more what's the situation to students to aid their pass rate. Question very much identical, very much the same. The only real difference really being in here is that your revenue materials and your issues regarding your material misstatements or immaterial misstatements are given to you right together, whereas in the specimen paper they were split and you actually had to use the information. Okay, it's 15 to 17, potentially 20 marks in this area. Okay, it tests your whole situation about your audit opinion that way. Because in previous questions, this has been hugely popular. Exam papers have been hugely popular that way. We have seen it on the specimen paper. We have seen it on the the September paper. Potential really exists for this to be seen a lot more. Hopefully that helps. Hopefully turn and do it. Okay, it is critical to have the mind map in your head regardless to it. Approach it logically, approach it clearly, define why you're basing your opinion, watch it in that way, back it up with materiality stakes calculations, individually and aggregate, state the impact on the profit, loss and balance sheet, profit overstated, profit understated, net assets or total assets, overstated, understated, okay, and that with a small bit of work and effort, it is a really achievable one. Okay, hopefully that helps, and we chat to you again.